Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will deep dive into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new episodes released every Tuesday and Friday. Thanks for listening. Welcome to this week's episode of the Prime Property Finance Podcast, where we share insight and knowledge into the world of property finance. I'm super excited for this week's guest. None other than Mr. Sam Hawken from Sam Hawken and Co. Property Lawyers, who is a solicitor and a property investor with a huge wealth of knowledge, and super excited to have him on board. So welcome, Sam.
Thank you. Thanks for the invite.
So just a quick intro to yourself. I know we've known each other for a long time now. I think it's pushing 12, 13 years. We met at a BNI meeting and I've learned a lot from you over those years. Your background as obviously a property lawyer, but also as an investor, a developer, and I think one of your key skills or superpowers is that of a deal maker and being able to put and structure a deal in a fantastic way. You're an all-round great bloke, so we're super excited to have you here. And also, probably from a personal perspective, you're a bit of a freak of human nature when it comes to endurance sports as well. Although I know you're struggling with an injury at the moment, but we might get something out of you on that side as well. But look, really excited to have you here. Welcome. Do you want to just give us a quick introduction about yourself?
Yeah, thank you, Gareth. That's very generous of you. Obviously Sam Hawken, as you said, property lawyer, property investor, developer, and studied law, became a specialist property lawyer, licensed conveyancer, 20 years ago now, or over 20 years ago, and had my own practice for the last 19 years, and started from scratch and grown it to what it is today. You know, I set out some property goals when I was 16, and became a property investor long before thinking about studying law. To be honest, I could never see myself working behind a desk when I was growing up. I grew up as a farmer, very physical, very hands-on. So being a landlord is an extension of that, perhaps. And with my upbringing around the farm and my wider family as tenant farmers, my dad wanted his own farm, so I understood, and sort of was infectious from my dad to want to own property, and how difficult things were, but the security that gave you. And so I set out my property goals when I was 16 and set about achieving those goals. And, you know, I had mixed advice. I don't think there was all that much training. There was very little training at that time. So a very trusted financial advisor who I totally believe had my best intentions at heart told me that no one made money out of property. And that, you know, I had difficulty getting funding in my late teens, early 20s, which made things very difficult. But you know, I've done all right since then. Became a landlord before going to university, and you know, learned to do up properties, learned a lot of practical skills, which help even now in advising on repairing covenants. On disputes over repairs and that sort of thing. If you've got a practical understanding, it makes a real help then, or working out building reg stuff, or figuring out layouts on properties that we're trying to reconfigure, and that sort of thing. You know, all that property experience all comes together and all adds something. Well, I've done a lot of different things. I don't think anything's been lost. A lot of transferable skills.
I think, that's a great point. I think one of the key things that when we speak to clients, or when I speak to clients from a finance perspective, some of the conversations around planning or building control or the refurb element. And if you're a property investor yourself and you've been through that process and you learn along the way, you can it's a big value add to your clients to be able to explain, well, look, I've been there, I've done that, this is what I did in that example, or have you thought about this? And I think those value adds are huge when it comes to client conversations. And having worked with you and had plenty of those conversations, I know that's where you do bring a lot of value. So how did you come effectively from farm boy into an early stage property investor, and then into how did that take you down to become a solicitor? Where was the change for you in that sense, or what led you down that path as opposed to staying in property full time at that age?
I found it very difficult to get underway with property when I was growing up. In my late teens, early 20s, I tried a few different businesses. I ended up going back onto the farm. Well, I didn't mind the farm work, I didn't mind the graft, I didn't love farming, and there's no money to be made in farming. So I tried all sorts of different things. Saw all my peers moving on, gone to university, getting themselves set up in careers, and thought, well, maybe I need to follow suit to some extent. So moved to Swansea to study financial economics and used the skills I learned to fund my living costs and what have you. I was already married by then. I got married at 19. Still married now, 30 years this summer. And so I did up properties for a property lawyer who also had a portfolio. And that's how I funded my way through uni.
So effectively you were a farm boy, and then you learned a number of trades, and you wanted to sort of start building your property portfolio. But then you went to Swansea to get further educated because you struggled to get the finance. And then you started building a portfolio, but it was a portfolio for somebody else rather than a portfolio of your own. But what did you learn from that?
Well, I learned how to take a property, renovate it, and sort of assess whether it was going to make money, assess whether it was going to be a good rental or a flip. And during my time, certainly in the first few years in university, it was most important just to survive, really. But just before leaving uni then, and whilst training, I started to build my property portfolio. But the solicitor I was previously doing it for wanted to do it in partnership. We had different ideas of what the partnership should look like, but what the intentions were. I was quite clear on my strategy, but he wasn't so clear on what he wanted to achieve from it. His attitude to risk was different to mine, and the scale that he wanted to do things at was quite different to mine. Although we talked about it, it was quite clear that we weren't aligned. And it took a while for me to realise that, and it was difficult then, separating. I've had a business partner now in the development company for the last decade or so, and when you do have a business partner where you are aligned, it really does propel you forward. So choosing the right business partner, I guess, is a really important thing and a really valuable lesson.
Yeah, absolutely. Obviously you mentioned a little bit about your property investing journey. What's your main strategy, or what does your portfolio look like at the moment?
Portfolio at the moment consists of the majority are buildings with lots of flats. So I own the freehold of a building, lots of flats in there. And over recent years, I've been trying to get commercial leases on them all, whereby I'm not dealing with any tenants. I'm not dealing with any individual residential tenants. I'm dealing with a small number of commercial tenants, whether they be housing associations, local authorities, Airbnb operators, emergency housing operators, that sort of thing. I've also got some offices, shop, barbers, commercial, industrial property, and obviously my legal practice.
I think from a properties perspective, that there's a massive shift, it seems, in demand, certainly from the people that we speak to on a daily basis that are interested to look at leases, to take away the stress and headaches of dealing with tenants individually, and obviously the increase in demands from the government and changing legislation, and it's always a struggle to keep on top of. So I think that there's definitely a shift towards local authorities and housing associations and charities and things. So that's something that we see a lot of. So fully understand that. And from an investor's perspective, it's a great strategy because it's a lot more hands off. It's a lot more passive, which is what most people get into property for in the first place. And whilst maybe you'll be getting a slightly lower than market rent or market rent, the lack of voids and maintenance makes a big difference to the overall performance of the portfolio.
Yes, that's right. So yeah, I've had my fair share of issues with tenants over the years, and it sort of compounded during COVID and during the lockdown when the government basically gave tenants the right not to pay their rent and not to be removed, and of course when they're on benefits and that sort of tenant, you're never going to recover from a tenant that's got a year worth of arrears. You're never going to get any of that money back, and when they've got that mentality, then it's difficult to rein it back in.
Yeah, 100% it is. And like you said, the changes to the legislation, both obviously already in place in Wales, but coming in England quite soon, it is making it more and more difficult to recover those debts and also to get those tenants out as well. So that's probably something for another episode. So I know Mark's got a couple of questions that he'd like to dive into.
Yeah, nice one. Thanks, Sam. Obviously we've known each other for some time as well. And always interested to hear the stories and the journey that you've been on, which is I think not necessarily vanilla. So that's really interesting. Just focusing more on the actual legal aspect then of finance. When we look at doing bridging with clients, part of the challenge that we often have is going to be around the associated costs. So we try wherever possible to be as explanatory as we can and set expectation around all the different aspects that come around finance. Legal as being a major part of that process, both for the lender solicitors and for yourself acting on behalf of the borrower. One of the questions we get asked a lot is the variance that happens or exists in the different types of finance that are available across bridging, development, buy-to-let, and so on. Are you able just to give us a sort of an overview as to the distinction between the different processes or the different activities that need to take place in each of the types of finance that are available, which probably then will ultimately justify the difference in cost and what that cost potentially could look like?
If someone's buying a home themselves to live in, and they're having a mortgage, the process that we follow will be governed by some generic instruction from lenders that they've all agreed. They've got a code or a handbook that they subscribe to, and so we know what it is that we've got to do for each lender. With commercial lenders, their instruction becomes less generic, more specific. And that's true of bridging more so as well. And so as you come away from the vanilla mortgages, then a lot more attention has to be paid to the specific instruction of the lender. So if you're getting a standard mortgage with Halifax, for argument's sake, we know what we've got to do for Halifax. We'll already be doing it as part of the conveyancing. We can sign it off without too much attention, if you like, to any specifics, because there are very few specifics. There may, in a mortgage offer from Halifax, an off-the-shelf mortgage offer, there may be 3 or 4 or 5 specific points that we need to look at, but everything else is generic. Whereas, let's say we're doing a bridge, we might have 2 or 3 pages of inquiries that we have to deal with. That might be 50 inquiries. That takes an awful lot of time to deal with. And typically, the solicitors will be looking at them. They will have their own solicitors reviewing them. And if we haven't answered the questions exactly how they want to see the answers, or they don't like the answer, then there'll be a series more inquiries. And so the cost of dealing with a bridge is significantly higher than the cost of doing an off-the-shelf vanilla mortgage. But then some bridges, and true with some commercial lenders as well, they do try and make the process as vanilla or as smooth as possible, whereas other bridges don't really care. It's almost like they know they get paid more for the more work they do, or the more complicated they can make it, and so they will, ask all sorts of obscure questions that just send us a bit loopy sometimes. But there we go. We do normally try and provide a fixed fee when we're doing the commercial work and the bridging work. It's obviously more than the residential rates, but we do try and provide a fixed fee. But sometimes we simply have to revise that a fee estimate when we're dealing with excessive inquiries from bridging lawyers.
So with that, so if we take an auction purchase, for example, where we will sometimes have to, because of the timescales involved, the 28 days. Let's take that as an example. We have to run the legal process concurrent with the valuation exercise. So therefore, you'll get the instruction without us actually having the valuation report back. Therefore, not necessarily having the detail or the specifics around the property itself. So how does that look, and how would that be different to if you had the valuation in hand at the start of the process to possibly getting sight of the valuation report, if indeed you do get it, midway through the process?
Yeah, the valuation report, we don't always see a copy of a valuation report with lenders, and the lenders will sometimes, or the valuer will sometimes make assumptions, and then we'll need to check the assumptions were correct. For instance, extended boundaries, or some access, those sorts of things, planning, building regs, and similarly then with a survey, there's usually a legal section in there that we need to verify. But the valuation isn't really important. It isn't that important to us. It's the offer itself. It's the instruction from the lender that we want to see. So we will have an idea of what a lender is going to ask for. You mentioned auctions. Well, quite often with an auction, there's normally a legal pack, and quite often the legal packs at auctions are not particularly comprehensive, and so sometimes there are searches in an auction pack, but there may only be a local search, whereas normally we would expect to have water and drainage and an environmental search, and if it's in a mining area, we would want a mining search, whereas some lenders may want to have a chancel search. Well, there's only been one reported case of a chancel case, and the liability was recorded on the title. So I don't see the point in doing a chancel search.
Just for our listeners, Sam, can you just explain what a chancel search is?
A chancel search is a search that checks to see if there's a liability to repair the chancel of the local church. So on the case where they had to pay out, I can't remember the road they lived on, but it was something like Church Road, Church Avenue, or whatever. It was very close to the church, and there was an entry on the title to say there was a liability. The legislation came in to stop or to make certain overriding interests registrable, and so the possibility of having an unexpected liability to repair church chancel is pretty remote, more so if you're not living in very close proximity to a church, and it's not recorded on the title. Well, if you have to stop what you're doing at the last moment and get a chancel search, it adds cost, it adds delay, and for no good reason, in my opinion.
Thanks for explaining that. I guess the crux of it is there's lots of potential things that can be unearthed during the legal process that people aren't necessarily aware of. Just maybe touching at auction a little bit further then, you mentioned the legal pack. Is there a minimum legal requirement that needs to be within a legal pack for auction that would class it acceptable? And do you think that people don't add any further detail than the basics needed because they are trying to hide something? Or do you think it's because they just don't want to spend additional costs because obviously sometimes if they're in a position where they need to sell at auction, it might just be that they haven't got any money and just want to do the minimum that they need to get it online? Or do you think it's a bit more to try and possibly hide things?
That's a good point to make, Gareth, and it's all of those things. There's no one motivation to sell at auction. So I'm aware there are companies that provide an auction legal pack service, and they will provide. They don't provide a full legal pack. They only provide the odd search, copy of the title, no information forms. And you then have to make a decision. Well, are they trying to hide something? Are they just not providing information because they don't want to give the answers? Or is it just being lazy? From my perspective, from my firm's perspective, we provide legal packs for auctions free of charge. And we charge the seller, we charge the buyer within the contract for the legals and the legal pack. And we charge an increased fee to take account of those times when we don't actually get paid for the work because the property didn't sell. So even though we're not charging, we still provide a full and complete auction pack as far as we can. But each firm is different. Of course, there are instances when people try and sell a property. They can't sell it because they've got a problem or two. So they put it in the auction, thinking, well, I'm going to sell it at auction. And of course, there are always times when people buy at auction not having had legal advice on the legal pack. So even if the information is there, they haven't necessarily understood the implication of the information that's there. They haven't had legal advice, and they buy it and suffer consequences. Other times, again, as I said, it's just lazy lawyering, and there's no consequence to the solicitor for not providing a comprehensive legal pack. Of course, the consequence to the owner is that buyers that are doing their due diligence properly might be put off from bidding because they perceive there to be risk due to the lack of information. Take, for example, property information forms. Property information forms asks about the boundaries. It asks about any work that's been done for planning and building regs. It asks for things like, has there been a dispute and what services are connected? All those things are really important to know, and they all have legal implications. And if that information is not properly recorded in the legal pack, we're not in a position to advise a potential buyer and give it a clean bill of health for them to bid. So it is selling the property short potentially by not providing a full legal pack.
Yeah, I guess you'll have some buyers then who, like you said, are put off because there's not enough information and they just don't want to take that additional risk. Whereas if there was more information in the pack, they probably would have then bid on the property, and the more bidders, generally the higher the price. So I guess the auction house has got needs to take some responsibility for that as well. But I totally understand the difficulty, and there's a lot of moving parts.
You said what's the minimum acceptable pack? Yeah, you asked what the minimum acceptable pack was, and I guess the absolute minimum would be a contract.
Okay, so that's interesting. I didn't realise it was that minimal.
I don't think I've ever seen a legal pack with just the contract in it, but sometimes they have no searches, and sometimes they have a few searches, and sometimes they have them all. Sometimes they always have a title, but then I have seen copies of title with lots of blanking out where they want to disguise who the seller is and that sort of thing, or what price was paid historically. So even though you usually have the title, sometimes you don't actually have the full title. And frequently within the title, it refers to other documents. Frequently, you won't have the other documents. They've only given the base title. And then the replies to inquiries. It's common for there to be no replies to inquiries.
I had a client once who rang me and said, right, I've got this property at auction. I said, okay, great. When's the auction? He said, oh, it was last week. I was like, right, okay. He hadn't had the legal pack checked out at all. You know, and so it was a mess from the beginning. And he basically, you know, we went through it, but within that legal pack, there was a whole lot of fees that, you know, you had to pay the seller solicitor's fees, you had to pay this additional premium, which was just kind of made up from nowhere. Plus all obviously, so I think it was over 10 grand's worth of fees that he had to pay that he wasn't aware of. So that just made it difficult, and his options were to pull out, but obviously because he's won the auction, he's exchanged, so he's committed to buy the property, potentially loses 10% deposit. So yeah, 100%, that's probably a lesson that we might chat about, but making sure you are, things we talk about all the time is being prepared, getting the legal packs checked and getting all your ducks in a row before you do go and bid at auction.
Just a quick question on that as well. So, you know, we talk of bridging and the checks and everything like that and auction. Are you finding in general that, you know, I've had this feedback from other solicitors, is that the checks are getting heavier and heavier on bridging and are more akin to that of a mortgage than the point being is obviously there's a higher risk profile on bridging loans, hence the interest rates you're paying, etc., because they're not mortgageable for one reason or the other. Are you seeing that lenders generally requirement lists are just getting more and more detailed over the period?
I would say that bridging has always been more onerous. The work involved has always been more onerous than a mortgage, because the work involved with a mortgage, we know what it is.
Yeah.
We do it automatically, and our assistants do a fair amount of that work because it's routine work.
Yeah.
Whereas with bridging, it's always been, here's our instruction. We have to go through the instruction with a fine tooth comb and work out what we need to do. That's not the work of an assistant doing routine work. We might say, right, can you do all of these individual tasks to comply with these specific instructions? But you still got to be very careful in going through those instructions. The amount of inquiries now that bridgers are asking, I think, has increased, yes, but it's never been less than. The work has never been less than that of a mortgage. It's always been more. It's just becoming a wider gap.
And it's interesting because I think the general conception, the general idea from borrowers is that, you know, we're paying more, we're paying higher interest rates. This is perceived to be quick access to finance, you know, because typically it is quicker than a mortgage. To then learn that there's all these inquiries, the depth that you need to go into is probably a bit of an eye-opener to listeners who haven't really gone through the bridging process. And then, as I say, just add some merit to why the price from the legal costs is kind of where it is. Is there, and you know, we're talking about mortgages, we're talking about auctions still. Is there merit in individuals within the legal pack paying themselves to have various searches done? I know that's a difficult one because you don't know if you're going to win at auction and so on. But if you're deadly serious in bidding for that property, is there any merit in trying to get ahead of that legal process, or would you say no, just rely on the legal pack and see if you win first before you start investing more money?
When you win an auction, it's you've committed to buy, and it's buyer beware.
Yeah.
So yes, there is merit in getting replies to all the inquiries. We frequently get people come to us and say, want to buy buy a property at auction. The auction's in 2 days' time. Can you report on the legal contract to me? Or can you check the legal contract or the legal pack for me? Well, of course, then that gives us very little time to go through the legal pack, report to them, and then raise any additional questions or get any extra information. Whereas coming to us, normally an auction catalogue is released sort of 3 weeks before. If they go and view it, perhaps we could have 2 weeks notice. Well, 2 weeks is plenty of time to get some of the searches back. Some take longer than that, but some are back within 24, 48 hours. Like environmental search is a prime example. That's normally back within hours rather than weeks. And but we could also ask the seller's solicitor specific questions. Say, look, our client's interested in bidding, but we need more information. Can you provide the information form, please? Sometimes they'll give it to us, and sometimes they'll upload it to the legal pack. Sometimes they'll just ignore us because they don't want to do it. But at least there's opportunity there to carry out that extra due diligence. And of course, if our client is aware of the whole situation, other buyers have only had a very brief legal pack, then some of the buyers we put off. But although I've said some buyers we put off because of a lack of information, in actual fact, to some extent, there is a contrary argument to that. The contrary argument is there is a proportion of buyers at auction that think that they can read a legal pack themselves and they're perfectly bright enough to interpret what it says. So in which case, the less information that is in the legal pack, the more confidence an uneducated person looking at a legal pack thinks, I can see this and understand it. It makes sense. There's less to get confused about.
Yeah.
They're therefore more confident to buy it. So that can clearly work against them if they're successful and there happens to be a problem with a property.
Thanks, Sam. I'm conscious we've talked a fair bit about auctions specifically here, which I think is really helpful and valuable to people. Yeah. Can you just give us a bit of a rundown then? Obviously, I know you do auctions, but I know you do other things within Sam Hawking Property Lawyers. What kind of business do you do, and where do you spend most of your time helping clients? So that's the first question, and I don't know whether this might be for later on, but I'll throw it out there now as well. I'm just keen to know around, whilst with auctions, we have a relatively short window to complete the transaction. I've always struggled to understand why the legal process on other normal transactions can take so long. And is there anything, in terms of what are the key drivers that make a legal process, a house buy-in process then, longer than it needs to be? So two very different questions, so we can maybe tackle one at a time, but I want to make sure we didn't miss it.
Yes. Okay. The first thing was what do we do within the legal practice? Within the legal practice, we're specialist property lawyers, so and we do non-contentious work. So we do everything to do with a property deal, from the most straightforward conveyancing to the much more complicated, non-standard arrangements, and everything that goes with the deal. So from funding, joint venture agreements, shareholders agreements for an SPV, for a company that's dedicated to property deals, everything to do with a property deal. What do I really specialize in doing? Well, it's I guess my primary thing is to help people that are not sure how to structure their deals, and to make sure they're getting the value they can out of it, and secondly then stepping in when there's any complicated issues that arises that need help to resolve. So that's what we do. The second part of that then was about time why does it take so long sometimes? There's a lot of things that influence that. I guess one thing to bear in mind is sometimes transactions can go through really quickly. It's really good when a transaction goes through really quickly, and that is everyone's preference, apart from a buyer or seller that doesn't actually want it to go through quickly. And sometimes that happens too, and sometimes we are instructed to make sure things don't happen quickly, even when everybody else thinks that everyone wants it to happen quickly. So sometimes the client will tell us to slow a transaction down, but they will then tell the other party it's the solicitor's fault it's taken so long. So we do take the rap sometimes, but that's not true in all cases, of course, but that does happen sometimes. Conversely, everyone wants it to happen quickly, and a file can have momentum. When we get instructions quickly, the searches come back quickly, the contract pack comes in quickly, everything happens quickly, you're really familiar with everything that's going on, everything is reported promptly and quickly, and that file just has momentum and completes quickly. Other times, things take a long time, something takes a long time, and it just takes the momentum out from that file. Give you an example. I talked to a client about a deal, help them to structure the deal. So the first thing that needs to happen is the client needs to onboard with us, and then they take 6 weeks to onboard with us. And when they onboard with us in 6 weeks' time, we can't fully remember. We've got lots of files on the case. We don't fully or instantly recall exactly what we're doing for that client if it's a non-standard deal. So then it goes into a pile of files, and we might refresh. It'll take us a few days to refresh ourselves what we're doing. Then we'll give instruction to the assistant about what maybe ordering searches or whatever. The client might be on the phone in a month's time saying, why haven't we completed yet? Not appreciating that they've taken more than half the time to onboard with us, which should have taken 10 minutes on the smartphone. And that sort of thing is really frustrating. Sometimes we are so busy. We don't have. There isn't a really good way of monitor of keeping check on how busy everyone is to some extent, because if you're a builder, you're going to build a wall today. You've got a good idea it's going to take you a day or a week. The weather's bad, so you can phone the next customer and say, look, I'm not going to be able to come to your property next week because we've had weather delays this week, so we're going to be another 3 or 4 days, and people know where they are. With us, we're probably working on somewhere between 100 and 120 files each, we don't know what's going to come back each day. And of course, you can't say, okay, well, we know we're going to be flat out next week, so we don't want any more business this week, because this week's business is business for 2 months' time. And the busyness of next week or the week after isn't relevant for 2 months' time. And so there has to be an ongoing churn. And of course, we have clients that want a daily phone call or a call 3 or 4 times a day. If you've got a fast transaction, if a transaction were to complete in a month, and on average we're having a call every couple of days with a client, that's probably just about doable. But if a client is with us for 4 or 5 months and they want to have a call every couple of days, and every client wants a call every couple of days, that is just totally unviable. And but then I can appreciate that sometimes clients do want more contact than they get from us, and it's a difficult balancing act. But of course, if a major problem is established, and then one of the solicitors need to spend half a day working on one particular file, all the other clients have got to wait their turn, and I think that's not appreciated frequently. There's an expectation frequently that we should be available to all clients at the drop of a hat or instantly. And I think that's something that has changed over the last 2 years.
I think also, and then you throw in the example from earlier where a client might ring up and say, can you check this auction pack for me? And that's going ahead in 2 days, and the solicitor needs to find some room to do that as well. And obviously that's urgent versus important, and that's a constant challenge that your guys must be up against. So I totally get that. Also, going back to what you said earlier in regards to the types of people that you work with, I know, having worked with you for a long time, that a lot of the deals that you are working with, mainly property investors who are working on relatively complicated deals or structures and developments and delayed completions or whatever it may be. And so those aren't your run-of-the-mill residential purchases either, are they? You know, your first-time buyers. Whilst I know you do work with those deals come with more complications, which need more conversations to get around them, and naturally they take longer to get through.
That's right. They need more attention. They need more time from the solicitor, from the senior person to work out what to do and how to progress. Yeah.
The other thing probably is that the way that things get lost in translation as well, and that's difficult. You know, one of the bugbears that I see probably is where people send emails which take weeks and weeks to get responded to, but by the time you get a chain which goes, you know, by the chain, you know, someone's off on holidays and you get a bounce back, and then that chain goes on for a month, where actually a couple of phone calls could have resolved those, you know, those issues quite quickly. So it's the difference. I feel sometimes that, and this isn't towards you, this is just a generic, and again, this isn't towards solicitors, this is lenders that we deal with, sometimes clients as well, and we are possibly guilty of this at times, is that it's easier to send an email than it is to pick up the phone, isn't it? I think people have become more accustomed to that, and that's probably something that people could answer a lot of queries a lot quicker just by picking up the phone. But you've got to get a hold of the other person as well. So it's a constant challenge. So do you want to talk a little bit about more of some of the specialist sort of deals or that you've worked on, or common type of property, you know, where you help add the most value to property investors?
Yeah, I guess I could talk all day about about those. Yeah, one that I advised in the last few days, and he's already called this morning. I've got to call him back shortly. Is a client who owns a building, needs to refinance. He's got bridging on that building, needs to refinance urgently. He's got mortgage offers out on individual flats. So it consists of 5 flats. So he's got 5 mortgage offers in the name of the company that owns the freehold of that building. He's got a solicitor that he's worked with for a long time, which has drawn up 5 leases. And he's got a mortgage lender's solicitor. And they've just got stuck. He recalled that I gave him some advice a few years before and thought, how do I solve this? So I know who's someone that knows, and called me up. And of course, that's the sort of thing that I deal with every day. But his solicitor had told him that he'd got, this building was worth 2.5 million. And so his solicitor had told him that he needed to get his mortgage offers changed to a new company, and that the new company would have a stamp duty bill of £100,000 that he wasn't expecting. So when he came to me, I simply said, well, there's 2 ways that you can do this. Neither of them are going to cost you stamp duty. One is a sale and lease back. So in which case the current owning company, although they sell the freehold, they reserve leases as part of the transaction. So they're only actually selling a freehold reversion for £1. And doing it that way, we can use the mortgage offers that have already been issued. And the other way would have been to have had mortgage offers in the new company, and then claimed intercompany group transfer relief to avoid stamp duty. But they're examples of where that specialist knowledge comes in, taking nothing away from the solicitor he had. He drafted 5 perfectly acceptable leases, and I told the client, look, get that solicitor to confirm that he's taking liability for those leases and pay him for the work he's done, because he's done a fair job. He just doesn't have the knowledge and experience of the deal, of setting up the deal. So that's one in the last 2 days.
And I know you've got, like I mentioned right at the top of the show, from your experience, that for me that is 100% a superpower, is being able to unearth a lot of these more complex deals and what those structures look like, and how you can add value, and huge amounts of value. I know I've been on calls with clients, and it helps that I guess I know you personally, but I've been on calls with clients, and I think we've gone down a rabbit hole, especially when it gets down to the legal aspect. And I thought, let's have a chat with Sam and get his opinion on this, and we can quickly get that answered. So, first-hand experience that you really do know what you're talking about and understand. Having started in property from 16 years old, can see where you've come a long way on that. So yeah, testament to your skill set there.
Just a quick question as well. Something that just jumped to my mind is, we were talking about this yesterday, Gareth and I, independent legal advice. So in many instances now where there's borrowing in corporate entity, the lender wants independent legal advice. The general perception of that is that you're in and out in a couple of minutes and it costs X hundreds of pounds or whatever needs to happen.
Yeah.
Can you just pad that out a little bit, because obviously there's a reason it costs what it costs.
Yeah.
There's a reason it's required, but obviously, I'll be honest, a lot of the feedback is I'm in and out in 10 minutes, and that just cost me this kind of money. So just sort of pad that out, as I say, to explain
what's it about.
Yeah, definitely.
Okay. So yes, as you say, commercial mortgage, so a mortgage to a company, and obviously most investors are using limited companies now. They're having a mortgage. Lenders will require personal guarantee almost always. And so the directors giving those personal guarantees are required to have independent legal advice. Our fee for doing that is £300 plus VAT, £50 extra per additional director. So £300 the first one, £50 per director on top for the extra ones. In and out in 10 minutes. 10 minutes is probably quicker than we would do it in, but the principle is right. Doesn't take long. Okay, but so first of all, what goes in advance? Well, first of all, we need a copy of the offer. We need to look through the offer. We need to onboard the client. We need their ID. We need to check their identity. We give them the advice, but once we've given them the advice, we then need to give the certificates to their solicitor or their lender. And then we're accepting the liability that they've had that legal advice. And therefore, attached to that liability is the risk of a claim against us. Give you an example. An old client of mine used a different solicitor a few years ago to do a transaction. He was recommended by the broker at the time, use this solicitor, and then they did an in-house independent legal advice. The independent legal advice did not actually read the offer. They treated it as here's a piece of paper, just say I've signed it and done it, and off we go. After the event, it became apparent that the solicitor changed the mortgage offer partway through, based on the instruction from the client, but the change wasn't properly done, and it was going from personal to commercial. The completion was going from personal purchase to a company purchase, and it all got messed up. Had the independent legal advice been given appropriately, then it would have been very clear to the client that the mortgage offer was wrong. The lender had got the wrong end of stick. They'd made it more complicated than it should have been. And so basically the client is claiming against that firm for £400,000 because of the personal guarantee and the problem with the mortgage. So attached to an independent legal advice that may have only cost a couple of £100 is an awful lot of liability. And you might say, oh yes, but insurers are paying that. Well, anyone that knows anything about insurance will understand that, first of all, there's an excess, and the excess in the legal industry can guarantee is quite substantial. So our insurance is very costly. All firms are very keen to protect their insurance. The premium is dictated by the risk of the firm and the track record of the firm. So no firm wants any unnecessary claims. It's there to protect clients, and quite rightly so. But at the same time, we don't want to be exposing ourselves to unnecessary risk for a premium that is simply not worth it.
Yeah, no, that
makes sense.
Yeah, no, that's really useful, as I say, because a lot of borrowers do see it as a cost rather than a protection, if you like. We understand obviously the legal process is there to protect. Obviously, from the borrower's side, the lender solicitors are there to protect the borrower, and the lender, and also the client as well. So everybody's acting with the best interest, really, on both sides of that conversation, really. So yeah, it's just interesting how ILA fits into that as well. So thank you for that.
Obviously, this is a finance podcast, and solicitors form a huge part of the transaction within the finance process. So I guess what we're trying to kind of establish are some of your biggest lessons from a finance perspective, possibly maybe as a solicitor, but also maybe your own personal biggest finance lessons as an investor.
Yeah, thank you. So from an investor's perspective, what I see all too often is people get stuck in finance. I know some of the early properties that I bought were from a financial advisor that wasn't good at managing his own finance, and he'd got far too many properties under refurbishment and not enough rent coming in, and he had several properties repossessed. I didn't know the lender. I didn't until I actually read the title at auction. Didn't realise they were his properties, and I thought, well, how can he let himself get into this situation when he's a financial advisor? But there we go. But I do see an awful lot of people take out finance, bridging especially. They don't give themselves enough time. Sometimes frequently the renovation takes longer than they think. Getting the new mortgage takes longer than they think, or if they're selling as their exit, the sale takes longer than they think to get, and to get completed, even when they've got a buyer, and then they start getting all sorts of additional costs, and they're panicked in finding an exit. So that's a key lesson that I think we find in the legal practice. From a personal perspective, I've always invested with money that I've never risked money that I can't afford to lose. I guess that's one lesson. Always spent a lot lower than my means, and to create long-term wealth. If you spend all the money you've got, you're not going to have anything left. But to keep investing, to regularly invest, and wealth grows over time. And I think that's my key lesson. Just never stop doing the things that are making you successful and that are making you wealthy.
Really appreciate your time today. Just like to wrap up with a couple of top tips from your side, and this can be there were a couple of tips in there along with the lessons. But if any top tips maybe from if an investor wants to, it could be anything from make a deal happen quicker, or let it be more profitable, or the way they operate or interact. Any top tips, that'd be great.
Okay. When I have people call me up unsure about a deal, or phone me up with instruction, and it's clear that there isn't, they haven't really got a firm grip on the deal. The first thing I ask them is, look, what are you trying to get to in the end? And understanding what the end game is normally then provides a clear route as to how to get there. And I think some investors see a shiny penny, if you like, or know there's a shiny penny, but they think they have to do a deal in a particular way, and they don't necessarily take into account what they're actually trying to achieve in the end. So that's normally a starting point when I'm assessing a deal. But how can they? The other thing that lots of people don't do is it's to do with heads of terms. When you're buying a property in a traditional way, you go into an estate agent, make an offer. If your offer is accepted, the estate agent will produce a memorandum of sale, and they will send a letter and a page summary or whatever of an introduction to each party. So to the seller, the buyer, the seller's solicitor, the buyer's solicitor, saying, this is what's been agreed, this is the property, this is the price, this is what's been agreed, and here's an introduction to you all. I see a lot of instances where perhaps people have got an idea of a non-standard agreement, or perhaps they've been on a course and they think the course they've just done is mainstream, and they'll call us up and say, right, can you do this deal? Can you do a lease option? Yeah, okay. Right, it's between me and this guy. Here's the address, and this is the price. Hang on a second. We need an awful lot more information than that. I think the key thing for me is when it's a non-standard transaction, there isn't a standard format to follow. The standard format is the equivalent of you going into an estate agent, agreeing a price, and the estate agent issuing a memorandum of sale. If it's not a standard format, we need a lot of information in order to set the deal up, in order to know what everyone's doing. So, if there's a delayed completion, what's the purpose of delayed completion? What's the reason for it? If there's work, what works are being carried out? How long are they going to take? Is there a buffer period? And all that sort of thing. We need to know that information because it's not standard. And we need to be, whether we're acting for the buyer or the seller, we need to make sure the risk is managed for both parties. If there's help with finance, if there's private loan agreement, there's all the terms of that loan agreement that need to be agreed between borrower and lender. If you're getting a mortgage, with someone, you're giving them that information at the beginning, and then we're getting the full mortgage instruction. But if we've got to reproduce that mortgage offer, which is basically what a loan agreement is, we need to have that information. We need the heads of terms. If we're doing a lease, there is no standard lease. So we need to know who's going to carry out the repairs, what they can use the property for, who's going to pay the insurance, all these sorts of things. There's a whole list of them. We need to know that. So I guess a top tip is, if you're doing a non-standard deal, the first thing you need is a template for a heads of terms, because the template heads of terms will tell you the topics that you need to agree with the other party. So a template heads of terms for a loan agreement will say how much you're borrowing, what's the interest rate, when have you got to repay it, is it interest only or capital repayment, what happens if you're late, is there a penalty, have you got to pay a fee, is there a higher rate of interest, and all these sorts of things. Is there a personal guarantee? Is there a charge? Is there a first or second charge? Is there a charge over a second property? All these sorts of things we need instruction in order to be able to do our job.
That's really helpful, Sam. And I know anyone listening to this, the first thing they're going to say is, "Can I get a copy of that template?" So,
We
so if people did want that template, are they able to reach out to you?
certainly we don't charge for giving a heads of terms template. We're more than willing to dish them out, but we'll need to know what template they want, because we've got template heads of terms for all kinds of different deals. So if someone's having a private loan, that's a totally different heads of terms to if someone's having an option.
Yeah. Okay. So getting the right contract for the right type of transaction. But I think it makes it, ultimately, if a lot of these types of conversations are between other investors or between direct to vendor, or they're more business in their operating form, and the value of getting heads of terms is clearly writing down what the outcomes of the conversations that you have and what you've actually agreed. Because I've seen it happen before, where you go to a meeting and you have a conversation, you agree some terms, you come away, and then you come back to the meeting again and you say, right, we agreed this last time, and people are saying, no, that's not what we agreed. So it's basically almost a heads of terms is almost like a minutes of a meeting, isn't it? Where, this is what we agree, this is how we're going to move forward, these are the next steps, and these are the parties involved. So yeah, that's a really, really valuable bit of advice. Thank you, Sam. Anything else before we before we wrap up?
If someone has minuted their meeting, if you like, and not used the template, that's fine. Always happy to have a look through what they've got, and if they've got most things there, just send them away again with a couple of points that they need to negotiate to sort of get the full picture that we need. But they need to be, someone needs to be quite knowledgeable and competent to do a non-standard, to agree the terms of a non-standard agreement without following a template.
Yeah, absolutely. Mark, any sort of closing thoughts or questions before we wrap up?
Yeah, I think what this has highlighted is the complexities that obviously exist within the legals. So a lot of people do perceive it to be a lot more straightforward than it actually is, understanding that there is a lot of consideration, especially for non-standard, as you say, mortgages, which is a lot of the stuff that we tend to deal with. And I think one of the key points of this as well is, as always, as the borrower, the more engaged you can be in the process, the easier the process should theoretically be. Don't be the bottleneck, be the person that's driving it forward.
Yeah, absolutely. So I guess, kind of in closing then, I think, there was some really valuable points there. It's great to hear your journey, Sam, from a professional perspective in what you've learned along the way and how you put deals together, but also some of your property investing experience, which we could probably do a whole other episode on that, no doubt. But hopefully we'll have you back on the show again in the future, and we can maybe deep dive into certain elements. So I guess for the listeners out there, if you have any specific questions that have risen up from this and that you'd like us to cover in the future, then please write to us and we'd be happy to help them. Sam, if people wanted to reach out and connect with you, what's the best way for them to get hold of you?
I guess email or give the office a call. My email is sam@samhawking.co.uk. My office telephone number 01639 884 884.
Perfect. Thank you, Sam. So what we'll do is we'll add those into the show notes as well. So if anyone wants to get hold of you, they can do. I must apologize. I know we've had some technical issues, so hopefully that hasn't impacted the episode too much, and people have still managed to get a whole heap of value from this. So look, yeah, thanks very much for your time, Sam. Really appreciate it. Obviously, you've got a huge depth of knowledge in the investing field, not just from a legal perspective, but from property investing as a whole. And it's been great to share my personal investing journey with you. You were a big inspiration to me to start my journey. And I remember it was many, many years ago, you took me to my first PIN meeting, and that started my, adventure, I guess, in this. It's been a rocky road, no doubt, lots of ups and downs, but it's been a really exciting journey along the way. And just a personal thank you for your help and support over the years. So that's it, the end of the episode. And like I said, thanks very much for coming, Sam. Thanks, Mark. And we'll catch you on the next episode.
Cheers, Sam. Thank you very much.
Thank you.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you could give us a review and subscribe to the show. If you'd like us to answer any questions or go deeper on a specific topic, then please drop us a message. And also, please follow us on social media. All our different handles are in the show notes below. Thanks.